Bitcoin is a digital currency. Think of it as online cash, but with a twist. Unlike traditional money, it isn't printed or controlled by any government. Instead, Bitcoin exists entirely online, powered by a global network of computers. You can send it to anyone, anywhere in the world, at any time, without needing a bank or middleman to approve the transaction. This freedom is part of what makes Bitcoin so revolutionary. But with that freedom comes a wild ride. Its price is famously volatile, swinging up and down in ways that can be both thrilling and nerve-wracking. For some, these swings create big opportunities. For others, they bring big risks. The value of Bitcoin isn't set by any authority. Instead, it's determined by what people are willing to pay for it at any given moment. This makes its market unpredictable, fascinating, and sometimes even chaotic. For many, Bitcoin is more than just a currency. It's an investment, a statement, and a bet on the future of money itself. Some see it as digital gold, a way to store value outside the traditional financial system. When its price rises, confidence and excitement spread quickly. But when it falls, anxiety and doubt ripple through the community, sometimes leading to panic selling or heated debates online. Headlines around the world track every move, because millions of portfolios and even entire companies are affected by Bitcoin's dramatic swings. Its price is shaped by a mix of factors: news about regulations, global economic shifts, and even technical updates to the Bitcoin network itself can send prices soaring or tumbling in a matter of hours. Today, December 3rd, 2025, Bitcoin has surged back above $93,000, a major rebound after weeks of turbulence and uncertainty in the market. In this essay, we'll break down why Bitcoin bounced back, what triggered the recent drop, and how a wave of new optimism is fueling the current rally. We'll explore the regulatory and economic news behind the surge, the role of institutional investors, and what all this means for the future of crypto. The story of Bitcoin's price is really the story of how the world is adapting to a new kind of money, one that's borderless, digital, and constantly evolving. Let's dive into the forces driving this latest chapter in Bitcoin's wild ride, and see what lessons we can learn from its unpredictable journey. We'll look at the correction that shook investors, the policy changes that sparked hope, and the broader impact on the entire crypto market. By understanding these shifts, we can better grasp where the crypto market stands today, and where it might be headed next as new developments unfold. Buckle up, because the Bitcoin roller coaster never stops, and the next twist could be just around the corner. Just days ago, the crypto market was gripped by fear as Bitcoin plunged to nearly $84,000. The suddenness of the drop sent shockwaves through the community, catching even the most attentive traders off guard. This sharp drop was a wake-up call for investors used to last year's bullish run. Many who had grown accustomed to steady gains were forced to confront the reality that the market can turn on a dime. The fall marked a 33% decline from October's all-time high of over $126,000. It was a dramatic reversal that erased months of optimism in just a few days. For newcomers, it was a harsh lesson in volatility. The roller coaster nature of crypto became all too real. Many questioned their decision to enter the market at all. Even seasoned holders felt the pressure. Some began to doubt their strategies, while others doubled down, convinced that volatility is simply part of the game.
Analysts blamed profit-taking after the rally, as investors locked in gains from the previous surge, and renewed regulatory worries for the correction. Headlines about potential crackdowns and new rules only added fuel to the fire, amplifying uncertainty.
These factors combined to push prices down, shifting sentiment from greed to fear almost overnight. The mood in online forums and trading groups turned anxious, with many bracing for further losses. Such corrections are part of Bitcoin's DNA, parabolic rises followed by sharp pullbacks. It's a cycle that has repeated itself time and again, testing the resolve of everyone involved.
For some, these dips are buying opportunities, a chance to accumulate more at a discount, believing in the long-term vision. For others, they're a reason to panic. The fear of further losses can be overwhelming, leading to hasty decisions and sleepless nights.
The big question, was this the start of a bear market, a signal that the good times were over for now, or just a healthy reset before the next move up? Some experts argued that corrections are necessary to shake out weak hands and set the stage for future growth. The answer would come quickly, as the market's mood shifted yet again. In crypto, nothing stays the same for long. In crypto, conviction is always tested, and only the boldest stick around for the next chapter. Those who endure the storms are often the ones who reap the rewards. The recent plunge was a reminder. Bitcoin's path is never smooth. Every rally is followed by a challenge, and every setback is a test of belief. But as we'll see, the story didn't end there. The next chapter was already unfolding, promising new twists and opportunities for those willing to stay the course. Just as quickly as fear took hold, optimism returned. The mood in the market shifted almost overnight, as if a switch had been flipped. Traders who had braced for further losses suddenly found themselves scrambling to adjust to a new reality. On December 3rd, Bitcoin roared back above $93,000, gaining over 7% in a single day. The speed and strength of the rebound caught many by surprise, as the market erased days of losses in mere hours.
This rapid rebound restored confidence, hinting that the correction's bottom was in. For many, it was a sign that the worst was over and that the market was ready to move forward. Investors who hesitated during the drop now rushed back in, fueling the rally. The fear of missing out became a powerful motivator, pushing even cautious traders to act quickly. The V-shaped recovery erased the week's losses and signaled that buyers were ready to defend key levels. It was a dramatic turnaround that left many analysts rethinking their short-term forecasts.
Such sharp reversals are classic in crypto, showing how quickly sentiment can flip. In this market, panic and euphoria often exist side by side, and fortunes can change in the blink of an eye. The bounce wasn't random. It was sparked by a wave of positive news and shifting expectations. Headlines began to focus on new opportunities rather than recent setbacks.
The market's narrative changed from fear to hope as new catalysts emerged. Suddenly, optimism was back in style, and the mood was contagious.
Regulatory optimism and economic policy shifts combined to create the perfect storm for a price surge. These developments gave investors new reasons to believe in a brighter future for crypto. The lesson? In Bitcoin, fortunes can change overnight. Staying alert and adaptable is key in such a volatile environment. The market's resilience is a testament to the strong demand and belief in crypto's future. Even after sharp corrections, the appetite for risk and innovation remains strong. Let's look at what fueled this dramatic turnaround, and how the events of that week set the stage for what came next. A major driver of the rally is fresh optimism from U.S. regulators. For years, unclear rules kept big investors on the sidelines.
Now, the SEC is signaling a friendlier approach, working on a modern framework for digital assets. The proposed innovation exemption would let crypto firms experiment without immediate regulatory hurdles. This regulatory sandbox could unleash a wave of creativity and growth in the crypto space. Clearer rules mean less risk of sudden crackdowns and more confidence for traditional finance to get involved. The prospect of a supportive environment is bullish for Bitcoin and the entire market.
With the government moving from adversary to collaborator, the stage is set for mainstream adoption.
This shift is a foundational reason for the current rally, giving investors a powerful reason to believe. Regulatory clarity is turning a long-standing headwind into a tailwind. The crypto industry is finally getting the green light to innovate.
Another catalyst, growing hopes for a U.S. Federal Reserve interest rate cut.
Lower rates make borrowing cheaper and riskier assets like Bitcoin more attractive.
With signs of economic slowdown, the Fed may soon act to stimulate growth.
When safe investments yield less, investors look to assets like Bitcoin for higher returns.
Bitcoin thrives in risk-on environments, when optimism and risk appetite are high.
A weaker dollar from lower rates also boosts Bitcoin's appeal as a hedge.
The market is already pricing in a more accommodative Fed, fueling the rally.
Combined with regulatory optimism, this creates a powerful 1-2 punch for Bitcoin.
The connection between crypto and central bank policy has never been clearer. Bitcoin's fate is now tied to both Wall Street and Washington.
In a landmark move, Vanguard now allows customers to trade crypto-focused funds on its platform. This reversal from a crypto-skeptical giant signals mainstream acceptance.
As the world's second-largest asset manager, Vanguard's decision opens the door for millions of conservative investors.
It normalizes crypto as part of a diversified portfolio and removes barriers for financial advisors.
The ripple effect could push other firms to follow suit, accelerating adoption.
For many, this is the easiest way yet to access the crypto market.
The news has fueled market euphoria, marking a turning point for accessibility. Crypto is no longer fringe, it's going mainstream.
Bitcoin's rally rarely happens alone. Altcoins are surging too. Ethereum jumped 10%, signaling confidence in the broader blockchain ecosystem. Other major coins like Solana, Cardano, and XRP posted double-digit gains.
The optimism is spreading across the market, not just focused on Bitcoin.
Investors are diversifying, betting on a range of projects and technologies. A broad-based rally suggests genuine enthusiasm, not just speculation.
When multiple assets rise together, it's a sign of a healthy, sustainable market. The crypto ecosystem is thriving, with innovation at every turn. This is more than a Bitcoin story. It's a crypto revolution.
The bullish wave extends beyond the top coins. Projects like Polygon are rebounding too.
Even meme coins like Dogecoin and politically themed tokens are joining the rally.
This shows just how widespread the optimism is, with risk appetite at a high.
The diversity of winners highlights the market's depth and creativity.
From scaling solutions to meme coins, capital is flowing into every corner of crypto.
Such broad participation is what traders look for as confirmation of a true market recovery.
The rally is a market-wide event, not just a Bitcoin phenomenon.
Confidence is back, and the ecosystem is firing on all cylinders. The crypto world is more vibrant and more interconnected than ever. This is what a real bull market looks like.
The past week's rebound shows the resilience and growing maturity of the crypto market.
Regulatory clarity and hopes for easier monetary policy have set the stage for further growth.
Vanguard's move brings crypto to the mainstream, opening the floodgates for new investors.
When respected institutions embrace crypto, it signals the industry is ready for the big leagues.
The combination of clear rules, supportive policy, and easier access is a game changer.
While volatility remains, the foundation for future growth is stronger than ever. The recent rally is more than a price move. It's a sign of crypto's coming of age. The future of digital assets looks brighter than ever.